Hey guys, it's Mark here from ETFtracker. This is the ETFtracker show and the Exchange Traded Fridays edition. And it is an edition because we've actually launched another segment for the ETFtracker show. So that is the interviews with experts, and that's something that will come out each Wednesday. And so same time, same bat channel, Wednesday morning, 7:30, just like this one comes out at 7:30 on Fridays. The interviews with experts is interviews with people from different parts of the ETF market. So we talk to brokers, market makers, financial advisors, the exchanges as well, and also the ETF issuers. So it's jam-packed with content. So make sure you tune in. We've filmed a few of these episodes that will roll out over the next couple of weeks. So yeah, we're looking forward to sharing that content with you guys, the awesome audience. So I'm going to jump in now to see what is in this week's edition of Exchange Traded Fridays. It's another doozy, so let's take a look. Alrighty, so this is issue number 5. If you are interested in any of the back copies, just let me know. But if you subscribe to www.etftracker.com.au, you can see all the content. So if you subscribe, you will be able to get access to each of these each Friday. But yeah, request if you want to get any of the back copies. I'm figuring out how to put up the back copies as archives later on if anyone wants to go through any of those. So as per usual, you can listen or watch. We're on YouTube and Spotify. So all of these will take you to the YouTube or Spotify channels. So you can take a look at that. We've got a few episodes up there. So it's just flown by, the last couple of weeks. So we've already got 4 weeks worth of the ETFtracker show, the Exchange Traded Fridays show up there. And we've also launched the interviews with experts. But as I said, we also film these. So if you want to follow along and see the content that we're going through, like we're doing now here on the screen, you can take a look. Okay, so the first one that we had was an article that we put out on ETFtracker. So this is a new feature for the ETFtracker blog, and it's been something that we've been thinking about for the last couple of weeks, actually. So the idea is that, so at ETFtracker, we get monthly price updates, and what ends up happening is that by the time that data comes out, which is near the middle of the month of the next month, the prices in ETFs have moved. And last month we saw gold do really well alongside other commodities in the month of July, but then it fell in August. And we look at Yahoo Finance and Google Finance and other resources for pricing, and we're always constantly trying to pull different ETFs together to do the comparisons. Google Finance has a really good comparison tool. But what I thought would be even better is if we grouped all of those things together. So what you can see here is an article about it. We've got a new feature on the ETFtracker app. The ETFtracker page, that is. So it's under resources. So if you go to resources and the drop-down menu that comes up, takes a second or two to load, there's Google Finance comparisons. And what you've got at the top of the page, and if you're listening along, when you do get to that page, there's a set of preset groupings. These are menus at the top of the page. They talk about things like gold, other commodities, regional type ETFs. So there's Australian region ETFs, USA, China, broad China, India, other Asian, Europe, emerging market, factor-based, various other ones, technology even. So the idea is that we've already done the work to do the grouping. So if you click on, say, technology, it takes you down to the bottom of the page where you can see the various technology type ETFs. Now, Google Finance only lets you do 5 ETFs at a time, or 5 different securities to compare at a time. So we've had to group them. Sometimes we've done it based on market cap. Sometimes we've done it in an order which makes more sense. And when you click on the Google Finance link, it takes you to the Google Finance page, and the comparison's already grouped together for you. So in this technology group 1, we've got, let's go back to the menu here. We've got Hack, Asia, ATEC, Tech, and FANG all grouped together. So that's the 5 there. It takes you to Google Finance. That's already preset. So it just makes it easier, and I've already preset it to look at the 6-month basis. So you can click on that, go there to Google Finance, and then see Okay, well, what I can see right now is that Asia has still done really poorly. It had a little bit of a bounce back, it seemed like, in the last couple of days, but it is sinking again for, whatever reason that is there. And then out of the group, what's doing really well is HAC, which is the Global Cybersecurity ETF. That's at the top of the pile on the 6-month basis. So definitely take a look at that. Google Finance is awesome. So that is a new feature for the ETF Tracker resources. So check that one out. And then another one, which just came out yesterday. So yesterday on the Tuesday. So it was the 17th of August. So SAFA, if you're not familiar with them, they are the Stockbrokers and Financial Advisors Association. And we got to actually write an article with those guys. So it's really good because they are all about promoting all of the innovative things that are going on in the market. And so we spoke to them and we were able to collaborate on this article. So if I click on that, it takes you to the SAFA newsroom. So when that loads, hopefully soon, there we go. All right, the internet is working. So this article that we wrote, I'll give you the rundown. The synopsis was that by way of backstory, we used to look at different ETF data sets that would come out from the various exchanges. That will come out monthly. It's in Excel, it's in PDF format. There's a few charts in there, but we wanted to make it easier for people that maybe not so Excel savvy to pull all the data together. And we did that with ETFtracker. And so the ETFtracker app, the insights that come out of that, we spoke about what some of the things were that we saw. In this case, when we wrote the article, was to the end of June, so nearly $116 billion worth of FUM. That's now nearly 119. There is 76% growth year on year for the financial year, compared to about 30% growth year on year for financial years before that. We also saw a couple of other things. So for example, Australian and global equity ETF. So that's global in the sense that it's not Asia, it's not emerging markets, so they take those ones out. But that equates to, those two groups only equate to 74% of the total market assets under management. So it's a very equity kind of focus, and especially in those kinds of regions, that's where a lot of the ETF money is going. And a couple of other details there. So definitely check that out. So that's free to access there from SAFA. Let's go to the next article. And in this case, it is one from the AFR. So if you've got a subscription, great. Otherwise, we'll go through a little bit of it now. And that is this one from Jonathan Porter over there. It is ETFs are the best way to capture clean energy sector gains. And so what's this one about? So clicking on it, we see that they're talking about the annual growth rate, 76%, as we'd mentioned just before. A lot of that going to clean energy ETFs because there's a lot more ESG type investing going on there. Kylie Purcell here is quoted from Finder. She says that there is no doubt that ESG investing is growing in popularity among investors who are looking to align their money with their morals. They also talk a little bit further about the types of ETFs that are there. So one of the ETFs from Finder, which won an award, was the eInvest IMPQ. So that's the ticker, IMPQ. It's otherwise known as the Better Future Fund. And that won a Finder award. I think it was the Finder Green award. So the Finder Green award they won. So it had impressive financial returns. And it goes beyond just screening out negative impacts. It proactively looks for companies that are generating more than 50% of their revenue from operations that actively contribute to creating a sustainable future. So definitely one to look at there. There's also another one here from Van Eck. So the CLNE, Clean Energy ETF, which is designed to meet the growing demand for renewable energy. So definitely take a look at those. So they describe a little bit. They talk to Arian here from Van Eck, a little bit about that. They talk about the carbon intensity data and ESG metrics that are provided. And if that's not provided, you need to ask why. MSCI is mentioned there, and they've got ESG fund ratings, and there's a link to that. So definitely make sure that you check that out. I've looked at the MSCI data as well for other purposes and data work that I do, and it's great. There's a lot of different indexes there for different regions, or just specifically for the whole world as a whole. So yeah, you can definitely take a look at that one. So that's that AFR article. There is another one here from Financial Standard, best performing global equity funds for FY21. And in this one, they take a look at some of the best performing funds. And what was interesting is that an ETF, so most of these are not ETFs. So the top ones there were, well, actually Loftus Peak Global Disruption Fund is there as an ETF, so you can trade it. It was a closed-ended fund. It went to open, so that means it can be traded as an ETF. But there's also T. Rowe Price, Ironbark, Royal London Concern, Global Share Fund. And out of the group, they had Capital Group, Affinity, Dimensional, and then Fidelity and BetaShares ETFs. So those were some of the top performing global equity funds. So definitely take a look at that article. Who knows, one of your funds might be there. So that's interesting. And then we take a look at the ETF Securities ETF Monitor. So what happened last week? So they come out every Tuesday. So if you sign up, you can get that in your inbox, and that's great because you don't have to keep on looking at the pages or trying to find the page to get there. But it is easy if you go to ETF Securities, you go to their resources section, and then it's there under ETF Monitors. And so if we download the monitor, it's a PDF file and it's divided up into a couple of different sections. So the top section is the performance monitor, then they look at flows next, and then trading volume. And in terms of performance, which a lot of people care about, there was a four-way tie in terms of the weekly performance, and that was led by food. So that is the BetaShares Global Agriculture Companies. So it's not necessarily just food companies and restaurants and stuff. It's more of the agriculture kind of supply chain there. And then after that, it was OZF, which is the ASX 200 Financials X REITs. So it takes out REITs there. And then after that, it was QFN, which is the financial sector ETF, and then MVP, the Van Eck. So MVB is the Australian Banks ETF. So all of those were at 3.2%. What didn't do so well last week was ETF Securities, Physical Silver, ETP MAG, ETP MAG. But with all of this is just 1 week. You should take a look at a longer period. So they've got here what did well year to date. They've also got what did well over a 12-month period. So definitely ones to take a look for. Alrighty. So moving on, we've got another one here from the AFR. And this one's taking a look at the battery and tech play from ETF Securities. So that's ACDC. Great name. And it's also a great ETF as well. So in this one here, we've got a description of the ETF Securities battery play, ACDC, produced an annual return of 76% in the last 12 months to the 30th of June. So it invests in companies across the battery value chain. It's the only fund in Australia committed to this particular niche. Now, interestingly enough, we'll see later on down the list of articles, there's another one from ETF Securities in terms of a new ETF that they've got. So in this one, they also talk about climate change and how best to combat as it's a major concern. In 2021, we're finally seeing governments globally take action, with many announcing sizable projects and pipelines to transition to renewable energy, which is really, really good. So there's more detail here, and it's the 3-year anniversary coming up on August 30, a day after my birthday, which is great. And it's also a couple of days after the 20-year anniversary of the first ETF listing here on the ASX. So that was the 27th of August, so back in 2001. And it says here that the ETF tracks, this is ACDC, the ETF tracks an index from Germany it tracks an index based from Germany-based index provider Solactive, finally getting that out. And that identifies the major players across the battery value chain. And that's all linked to renewables and electric vehicles, which is awesome. So if you're into Tesla, if you're into all the competitors that are coming out all across the globe, they all need electric batteries as we move away from the ICE engines, internal combustion engines. So definitely an ETF thematic to take a look at. So there's a bit more detail here about lithium. It's one of the lightest elements on the periodic table. So you can take a look at all of that kind of stuff in the AFR article if you have a subscription. So well worth it if you do. Alrighty. And then another one here from ETF Securities, so bumper week for them. And this one is the ETF Securities Australian ETF Landscape. That's for H2 2021. And so if we click on that, it takes you to a page here where you can fill out the details. And what I'll do now is just pause. So I'll be back in a sec and I'll go find that article because it was emailed to me, and I'll be right back. Okay, so we're back and we've got the ETF Securities landscape report here. And as you can see here, they've got a little bit about the product summary of ETF Securities ETFs. So some of the major ones are here. So major, if not all, I think this is all, sorry. So this is the different ETFs. They've got ones that represent yield, there's future present ETFs, international, commodities, short and leveraged, which have done really well in this kind of market at the moment, and partner product ones. So they partner with Self Wealth to produce the SMSF Leaders ETF from Self Wealth. And as we go further down the page, they've got the different categories in their contents. So they've got equities, Australia broad-based, Australia small mid-cap, high yield, sectors, strategy, various ones. And as we go down the page into these ETFs, what you see is that they talk about the fund, the ASX code. They've also got here the management expense ratio, or MER. So if you're looking at the ETFs, they, like anything else, industries have acronyms, and MER is management expense ratio. So take a look at that. The good thing is that they've got the descriptions here of what these ETFs are all about, and then also the replication method. So do they fully replicate, in which they buy all of the underlying holdings and hold them physically, or do they synthetically replicate that? And that can be done through derivatives and other kinds of asset products. So that one's good there. They've also got the reference benchmark and the name of it here. So for example, if we're looking at, let's take a look at an ETF here. This is the E-Invest, one of the ones we mentioned before, the Future Impact Small Fund, IMPQ, or now known as the Better Future Fund. That is benchmarked to the S&P ASX Small Ordinaries Accumulation Index. They also have here how many, what's the number of holdings. So ETFs can hold various things. It can be equities, bonds, it can be futures products, various things there, right? How many holdings are in those ETFs? So some have more than others, but definitely worth a look at. And then if you see something that's interesting, you can go to that ETF provider's page and see what's inside that ETF. We also have a few ETF holdings apps in the ETFtracker. So if you go to the app section, we've got holdings analysis tools for beta shares, iShares, and State Street, and we're going to grow that. So that's what we've got at this stage. They also have the distribution frequency and also when the benchmark rebalances. So definitely worth a look at. This is a nice compendium, especially if you're either a novice to the markets and just want to read and learn a little bit more, or if you are well versed, and even if you are a veteran of the ETF markets, this is a nice little compendium because it's up to date. Okay, so definitely take a look at that. Alrighty, let's go to the global articles now. So what was going on around the world in the world of ETFs? And this first one is from Bloomberg. Again, you'll likely need a subscription. So we sorted out our subscription. So it's welcoming me back. That's great. But if you don't, I think it does give you access to a couple of articles for free to read until you hit your limit. Then you've got to sign up. So make sure you do. It's well worth it. They've got an ETF section. So we get our news, we go to the menu. There's this ETF section that's there. So it is under markets and then ETFs. So take a look at that. In this one, Cathie Wood hits back at Michael Burry, says China turmoil boosts US tech. And so if you haven't seen the news, there's a bit of a online kind of debate going on between Michael Burry, famous from The Big Short. He was famous for calling the housing market a drop back when that did. And, had a movie where he was played by Christian Bale. Great movie, really good to see. The premise of this is that Cathie's saying that, look, Michael's shorting the ARC Innovation ETF. That's their flagship fund. But Cathie's basically saying that, look, he understands the housing market, but the way that the fintech kind of market is working, it's not exactly what he thinks is happening. So he's shorting it due to the issues around Chinese technology giants. But so there's definitely a big bet going on there. So her response, and there's probably been some updates to this over time, so definitely worth checking out on Twitter. and also this article. So Wood's ARK ETF is now sitting with no exposure to shares of companies in the world's second biggest economy. So they pulled it out. They used to have a portion of ETFs, and I think it says it later here in the article. They had a portion that was, so 8% of its assets back in February were tied to Chinese stocks, but they pulled that out now. Other funds such as the ARK Next Generation ETF have also reduced positions in Chinese firms. The ARK FinTech Innovation ETF still has more than 9% of its portfolio tied to companies based in the country, including JD.com, Tencent Holdings as well. So that's the ARK FinTech Innovation ETF. So the ARKK is the ARK Innovation ETF, I believe. But yeah, anyway, take a look at this article. It is pretty interesting in terms of who's going to win, who's going to be right there. And, if you are invested or if you're just pulling money off the sidelines, I see in various forums and blogs and, just from talking to different investors, some people are not happy with the current turmoil that's going on and would rather put their money to work elsewhere. So hopefully, wherever you are, if you're still holding on, hoping for a recovery, or you have pulled out, that things do improve there. We always want to see markets just flowing smoothly as much as we can. Okay. Alrighty, so the next one is from the Financial Times. This is the age of ETFs is looming. And this is one of the opinions pieces. So they've got a section called Opinion, and this is their markets insight. And so the author, Robin Wigglesworth, he is definitely a well-known journalist within the financial community. And in this case, he's talking about the exchange-traded funds as being more than just passive index trackers, and that's in the headline there. So it starts off like an aging boxer who was still on top. It's starting to lose some of their pace and power. The mutual fund is slowly but surely being supplanted by a newer and brasher invention, and that's the exchange-traded fund. So we all know about ETFs here. If you're new to the market, you're getting to know ETFs because you listen to this podcast. But before dwelling on why, he goes into talking about why it's important to acknowledge what a phenomenal invention the open-ended mutual fund has been. Arguably one of the greatest in financial history, whether ranked by success, longevity, or social usefulness. And so there's a great chart here further down, which is called Passive Attack, and it compares ETFs, index funds, and other mutual funds. And what we do see is that ETFs are still a small part of that. We see that here in Australia. We've got what is like nearly $120 billion worth of funds. There's trillions in mutual funds, or our version of mutual funds here. So ETFs are still a smaller market, but that also gives hope that there's much more tailwinds behind ETFs because it's such a growing, in popularity, that is, growing asset class, and also funds going into it. So riding that wave and just knowing that there's a lot of fuel behind that, whether it's intergenerational wealth transfers or whatnot, globally and also here in Australia, we're seeing that this is starting to move up and up. ETFs are going to take more of a share of that pie. So they show that improving in this chart called Passive Attack, and so that is changing there. And then also they've got this this chart here, which is called US mutual funds incur capital gains more often than ETFs. And it compares capital gains in equity mutual funds and the equity ETFs. And so it's much more for capital gains and long-term capital gains in equity mutual funds versus equity ETFs. So ETFs are just that kind of asset class where it's cheaper to trade, it's easy to get in, and it gives you exposure to a lot more kinds of thematics that would have been harder to choose from before. The biggest advantage of ETFs are the flexibility. And so because of its genesis, and that's how they started, as an index tracker, the ETF is widely associated with cheap passive investment strategies. So the vast majority of the whole industry's $9 trillion of assets are definitely just these passive index tracking ETFs. But also ETFs have evolved into much more than just next generation passive funds. ETFs are adaptable wrappers for all sorts of investment strategies, and they're able to package up virtually any kind of market into a tradable Lego-like blocks of risk, whether offshore Chinese equities, bank loans, stock market volatility, or carbon credits. And we're seeing that here. There's a lot of different ESG funds. There's new ETFs coming out that are focusing on hydrogen, and we'll talk about that. And there's all this talk of Bitcoin or blockchain related ETFs. So ETFs are just making it easy to create a way to trade on a certain thematic that's in the market. So there's definite advantages to that. And then also the rise of leveraged and inverse ETFs. They've exploded in usage lately in 2021. So last year we saw a lot of inflows into the ETF markets, and what they're saying now is that the leveraged and inverse ETFs, we have a few here in Australia. There's definitely many more overseas, but globally overall, it has seen much more go into it in 2021. So the levels are over $120 billion, whereas before it just hit $100 billion in 2020. The years before that, it was just above 80. It got to 80 in 2018, and it was below 80. It was around 60, 70 in all of the years before that. So it was hovering around that mark. So there's something that's happened in the last couple of years that's really seen this explosion in popularity for that type of product. So that's the ETF kind of story that they've got there from Financial Times. So take a look. And then there's this other one here, that the last two from the global are from ETF Stream. So this first one is a breakdown of global equity ETFs as investors plan for new normal. And this is a talk about factors. And factors are interesting because where I used to work, we used to look at the different factors that affect stocks. And so we would look at quality, value, and momentum factors, and we'd give stocks scores based on how they're performing in those different kinds of factors, with the idea being that if you have in certain markets and certain ETFs, they respond well when they're having certain factors do well compared to others and benchmarks and the rest of the market. So some stocks would do really well when they have their momentum type factors, earnings momentum, and other types of momentum do really well. You can read more about factors, whether it's on Investopedia or just look up factor investing on Google, and you can see more. And in this ETF Stream article, they talk about the breakdown of global quality ETFs as investors plan for a new normal. And so quality smart beta ETFs could offer the ideal long-term factor exposure for investors seeking to look beyond the seemingly pendulous swing in favor between growth and value equities. And so some people will say that, growth and also in that momentum, so share price momentum and other sorts of momentum, are doing, really well. And when they don't do well, it swings to value. And we saw that recently, like when momentum was doing well, tech stocks were doing really well. And when that type of asset, whether it's equities or ETFs, was selling off at the start of this year, we saw that value type plays did really well. And so it is that kind of pendulum as they talk about the swings from side to side. But quality is something that they reckon in this ETF Stream article has been something that could have been a better play had you been in it. So they talk about the period between July 2006 and July 2021, so those 15 years. And what they say is that $100, if you just had $100 invested in that time, the normal, just the world index, so that is the MSCI world index, just buying the flat index there, not getting exposure in particular to one of those particular factors, that would have turned that $100 into $338 over that 15-year period. And obviously, if you invest more, you're going to see more returns there, etc. But meanwhile, the MSCI value world value index, $100 would have gone to $240, and the MSCI world quality index, that $100 would have turned it into $551. The MSCI world growth index would have returned $463. So the World Quality Index is actually something that's done really, really well. And going back to the Google Finance tracker that we've got, so you can scroll, we're back on the page here for those listening in. I'm scrolling back to the top of the page. So this is on the ETFtracker page under resources. And under that resources page, you've got ETF datasets, ETF apps that we list from we don't just advertise ours, but there's many other great ETF apps that are out there. And then the third option is Google Finance comparisons. And in that page, we have a menu option for factor-based ETFs. And so when we click on that, because there's a few, we have group 1 and group 2. And across both of those groups, there's quite a few quality type ETFs that you can play here in Australia on the ASX and Chi-X. Okay, so there's Qual, which is QUAL. There's QHAL, and those are both from Van Eck. There's also QLTY, which is a BetaShares Global Quality Leaders ETF. And then in group 2, we've got QMix, which is from State Street. They're SPDR type ETFs. That's the World Quality Mix Fund. And there's also HQLT, which is the BetaShares Global Quality Leaders. So it's the currency hedged version, if you want the currency type hedges going on there. So the idea here with this Google Finance page is that we've grouped them together to make it easier for you. And when you click on the links, you can go to Google Finance, so you can see how well these ones are doing. And so you can hover over each of these. So the one that's performed the best has been the Van Eck Miskey International Quality ETF. So over the last 6 months, it's returned the most. It's 25.82% compared to the other ones there. But overall, the factor ETFs have done pretty well when you take a look. So definitely one to check out. The ETF Stream article is free, so you can take a look more in detail at that. They go through some global ETFs here. So there's IWQU, there's XDEC, that's from Xtrackers. That's a ETF provider that we don't have here in Australia. There is iShares there, which does come in Australia. So that's from BlackRock. There's Fidelity as well. They've got a World Quality Income ETF. So definitely take a look at those if you're globally investing in ETFs. This is a good article for that. But if you're investing locally here in Australia, like I said, go back to the ETFtracker page and under resources for that Google Finance comparisons. Alrighty, and we are up to the last article for this week. So it's another one from ETF Stream, and it's a blockchain one. We know we've spoken about blockchain for the last couple of weeks. It's just a very topical subject, not just for the global potential listing pending SEC approval in the US and elsewhere for ETFs of the crypto variety, but also here in Australia. So if you didn't know already, there's a crypto kind of a consultation paper that's been out from ASIC, and they've been looking for respondents to that. So hopefully by the end of the year, that'll all be gathered, and we'll see some response there from ASIC about their thoughts on a local Bitcoin or blockchain or crypto type ETF. So this ETF Stream article is interesting because it talks about whether blockchain ETFs are a good answer for non-correlation. And so one of the interesting things about investing is that diversification is quite helpful. You can miss out on returns for sure if you don't have all of your eggs in technology, for example, when that was going up. If you put all of your investments into that singular type of basket across different stocks and ETFs and they're all going up, that's great. But when the market turns and goes down, if you're not diversified, you are going to go down with the market, and it is a pretty big fall if you do have that. And so diversification dictates that when you do spread your bets across different types of assets, then you are going to be protected when those kinds of things happen. Sure, you might miss out on some of the upside there, but the downside is really key because when markets are tumultuous, it's just a really nice hedge to protect yourself. And so what they talk about here in this article is that some research out from Citi titled Uncorrelated Growth Opportunities in Bitcoin ETFs. It posits a handful of thematic ETF classes offer compelling opportunities for alpha generation. So that's, So alpha is a term in finance that you want to generate outperformance. You want to generate returns above your benchmark, so looking for alpha or seeking alpha. So that name of that website is all about finding good returns, right? And as equities transition into the post-pandemic world, so Bitcoin and blockchain type ETFs could help with that alpha generation there. And the other part about this is that investing in blockchain ETFs, they can really help with correlation, because they are not necessarily correlated with the markets. And so if the markets are doing well, that doesn't necessarily mean that, say, Bitcoin or any of these other coins are doing well as well. And if you can find any kind of asset class, whether it is an ETF that's doing well, that has Bitcoin or blockchain in there or crypto, or it's actually buying stuff on the exchanges, of the 40 plus different exchanges there in the crypto space. Having crypto as part of your portfolio can really offer some good non-correlation, and you want that non-correlation, because if everything was correlated, like I said at the start, you're not diversified and things are going to go up, great, but they're also going to go down equally as hard. And so Bitcoin ETFs could offer that type of protection for you, that type of hedge in your portfolio. And better yet, if it's as an ETF, it just makes it so much easier to buy those types of ETFs. I had a conversation with Mark over at StockSpot today, and so that interview is going to go out in the ETF interviews with experts on Wednesday. So that's going to be from a couple of weeks from now. So definitely take a look at that. But we discussed this kind of topic, so it's well worth a look at. So that is from ETF Stream. Alrighty, so we are up to the videos, and the first video that we've got here is from The Compound, and that is out on YouTube, and that comes out twice a week. So we're listing the first one that they've got here, but definitely take a look at The Compound and subscribe to the show. If you're up early enough in the Australian morning, you can actually get to see the show live. I'm usually asleep. Everyone's working from home, so I don't have to travel too far to get to work. So sometimes I do miss that, but I do catch up minutes after it has finished up. And in this week, they had Josh Brown and Michael Batnick talk about a variety of market actions, including the rise of active ETF conversions. We spoke about that last week. So over in the US, there's a lot more active ETFs that are listing. Additionally, there's a lot more, there's a lot more active ETFs that are listing over passive ETFs. And also, as part of that, there's a lot more that we're seeing, also not just there, but also here in Australia. There's a lot more ETFs that were closed end, so they weren't traded managed funds, but there's a lot more of those that are coming to the market as open-ended. That means they can be traded as ETFs. So there's Magellan, there's Loftus Peak, Monash has an ETF out there as well. There's a variety, Hyperion too. So we're going to see more of that because ETFs are just such a popular asset class. So definitely take a look. So they talk about that. They also talk about the current bull run in markets and how it's actually the fastest in recorded history. So we've got a chart here below the videos, and this is actually a screen grab from the Compound show. And all of these are the different periods, and it's hard to see there on the screen. I'll see if we can increase the size here. All right, so what we can see here is different lines on the chart, and what these lines are showing is the number of years on the horizontal axis and the returns on the vertical axis in terms of what index is this? This is the S&P 500, and each of the lines represent different years. So there's the June 49 to August 56 period. There's the August 82 to August 87 bull run. There's the October 90 to March 2000, so a 10-year bull run. And what this is looking at how fast it was to get the market to double off the lows that it had. So when we saw the market drop most recently, which was March 2020 up until the current period, what we have seen is that it's taken just over a year for it to double. Now that is so much faster than all of these other ones. So it's the shortest in terms of the lines here on the screen. And what that means is that the markets have doubled much faster now off those lows than they have in any other kind of period of recorded history. So for the S&P 500, that is. So it's definitely something to keep an eye out for if you're concerned that, is the market ready to pop, or if you think it's going to still keep going. Just be mindful that, the market, yes, it's growing fast, but it's grown, it's doubled, but it's done so in a very, very fast manner. So that's what they're talking about there. They talk about other things such as Ethereum to 5,000 and some other topics. So definitely worth a look. The last three topics, the last three videos are from Ausbiz. And so the first one is called, Are Investors Too Overexposed to China? So that was on the 18th of August. And in this episode, they talked to Kanish from ETF Securities. And we mentioned a couple of ETF Securities articles and notes up above. He talks about the overexposure to Chinese markets and for investors, where else they can look across Asia and Indian ETFs. So if you're not looking into Asia anymore because of China, then you should definitely take a look at some of the other Asian ETFs. So there's India, there's South Korea, there's some Japanese ones. So definitely take a look there. They've got an Indian ETF, so they highlight it in the article. There's 2 Indian ETFs, so that we can see on the exchanges. So let's go back up. We're back on the Google Finance tracking page. And we've got all these different region groupings. So there's region Australia, USA, China, broad China. So the China ones are China specific. Broad China is like Asia, where the Asian ETF from BetaShares has a lot of Chinese names, but it's not all just China. There's the region for India. So when we take a look at that, it scrolls down and it takes us to, there are 2 ETFs that focus on India. There is the IIND, which is the BetaShares India Quality ETF. And then there's also NDIA, which is the ETF Securities Reliance India Nifty 50 ETF. And we can take a look at the comparison for those because we've got the link. We've done the homework for you, the hard yards. And so it takes you to Google Finance. And as we can see here, over the last 6 months, both of these ETFs are positive. So BetaShares has returned 12.3%. ETF Securities has returned 15.9%. So definitely worth a look at. Take a look at the article the video there from Ausbiz and the Google Finance resource that we have on ETF Securities. And then there's this other one from Ausbiz called the ETF Investors Guide to August Reporting Season. And in this one, Nadine talks with Blair from BetaShares, and he goes through what to look out for as an ETF investor in the current reporting season. So from dividends to interest rates and commodity prices. So that's 5 minutes. Take a look at that one. And the final video that we list is talking with James Whelan from VFS Group. So he's talking about the recent Delta variant in China of COVID and the tempered growth expectations in the US, what that means for commodities. So basically the idea is invest in ETFs and probably look to avoid stocks at this stage there, but definitely take a look at that article and James's take. We go to the podcasts, and as I mentioned, it's an exciting week for us because we launched the first edition of ETFtracker's Interview with Experts. So that's episode 1. And in this one, it was a chat with Adam Montana from Altus Financial. And so you can see that on YouTube, you can see that on Spotify. And that goes for about 25 minutes. So we learn more about the wealth advisor's view of how the ETFs kind of assets can help clients. So that's the link here is to Spotify, but you can also go to YouTube to watch that if you want to see my mug and Adam's on screen there. And we've got a description here, and in both Spotify and YouTube, it goes through the questions that we ask. And we talk about things like how did he get started? What kind of services they provide to clients at Altus Financial, what are their thoughts on ETF growth, how they recommend ETFs as part of a portfolio offering to clients, and some more questions. So if you've got 20 minutes, definitely take a listen to that, maybe on your jog or something like that. Hopefully I can make you run faster. And then we've got a couple of other ones here. So that's the first one. So another one is the Ideas Exchange. And this one is something that comes out from the ASX. So I'll let that load. In this episode, they've got Martin Din. He's from the investment products team over at the ASX, provides a lot of great insights on data. And we get that data that we need for ETFtracker. And he talks with Damon Gozin from Van Eck about the esport and video gaming industry. Now, it's interesting because VanEck has a specific fund for this, which is called ESPO. So that's the esports ETF, and that's attracted over 100 million in assets since its launch in late 2020. So it's been a very rapid rise for that particular ETF. So check that out. And as we look here, the ASX has a page called the Ideas Exchange. And this is, I think, episode 5, Martin mentioned to me, but they've got a few other episodes here. So episode 1 was Leaps and Bounds, the rise of ETFs. Episode 2 was Girl Power, female investors taking charge. Episode 3 was on robo-advice. 4, 5, and 6 they've got. So yeah, this is probably episode 7. So take a look, especially if you're interested in ETFs or if you're interested in just the esports markets in general, and you want to have a look at what people are doing to wrap different types of holdings that relate to gaming and esports into a ETF wrapper. So that might just be of interest to you in general. So well worth a listen and take a look at the other ones that they've got there. And then the other 2 podcasts, the first one is Let's Talk ETFs. So that is a show from the team at Seeking Alpha. And this one's titled How Government Crackdowns in China Are Affecting ETFs. And in this chat, the team talks to the CIO and founder of Up Holdings, and they discuss the impact of Chinese government crackdowns on tech companies, what that means for investors. So take a look. And the last one we list is from Phil Muscatello at Shares for Beginners. So if you didn't already know, Phil has a podcast. One is called Shares for Beginners. The other one is called Stocks for Beginners. And in the Shares for Beginners one, he talks about Australian investing, whether it's ETFs or equities or other types of investing. And so that's the Australian focus one. And the US focus one is called Stocks for Beginners. So you can listen to either or. We've been on the show, so it's been great. Shout out to Phil. So in this one, he talks with Gemma Dale from NabTrade, and it's all about reporting season. So they talk about the current state of reporting season. They talk about stocks including CBA, Rio, Fortescue Metals Group, Afterpay, and Square, and that deal that's just recently happened. So that's about 13 minutes, so take a look at that. In the tweet of the week, we take a look at this one from Mike Akins from ETF Action. So make sure that if you're interested in any of these tweets that we list, that you follow along and take a look at the other ETF type posts that they have. And in this one, the post is about Chinese Tesla rival XPeng and its expansion, and it expands production capacity as competition heats up. So there's a link to another article there, and then it shows here that XPeng is held in a growing number of thematic ETFs, primarily EV and clean energy. So we talked about EV type and clean energy ETFs. So there's the ACDC one. I didn't take a look as to whether or not that's in there if XPeng is listed, but you can go to the ETF providers page and take a look at that. And as a result, it's currently held, XPeng that is, in the Amplified Thematic All-Stars ETF, MVPs. So that's an international ETF, but there's an image here which shows just the different areas where that holding XPeng is held in different ETFs. And then we have the chart of the week. So in this week, we look at ASX total fund growth. And the reason we're looking at that is because we wait until we get the data from Chi-X to give a full picture of the market. So we get the initial part from the ASX. The Chi-X guys, they do the same type of ETF report each month. And when those numbers come through, what we're able to get is a full picture. And so now we see that initially from the ASX, we saw that the markets had grown to over 115 billion in July. But waiting for those other ones that come through from Chi-X, we've now seen that it's grown to 118.7 billion. So that's a big level of growth. It's about 3 to 4 billion over the last couple of months. Going back a couple of years ago, it wasn't that high. It was like 1 billion of growth each month. Sorry, that is quite high. But in relative terms, it's growing much faster now than just a few years ago. So we have data going back to 2017, even further back when ETFs started in the early 2000s, it was not this level of growth. So it's quite phenomenal now. And so it's interesting to see where the markets are at this pace of growth will be somewhere between 130 to 140 billion in market size by the end of the year 2021. So definitely worth a look. And you can see the chart here, which shows that it was about 42 billion in January 2019. So we don't go back to 2017 in this, otherwise there's too much detail on the chart, but you can see that in ETFtracker. And then we can also see that in early 2020, it dipped as the market had dropped. And so people were taking funds off the table, and then it has just grown since then. And there was a big jump in November last year with some closed-ended funds listing. That was MGOC from Magellan. So that bumped it up from just above 70 billion to over 90. And so that was definitely a big month. And now we're at 119 billion. So it's getting very, very close to 120. We're definitely going to get over that next month. The popularity of ETFs is just continuing to push that market up. So it's a great place to be in. And if you are in that market and you want some ETF education, you definitely need to check out what the work of the guys at Rask. So Owen Raskowitz and others in his crew, they have Rask Australia, and they've got a variety of different courses if you're interested in getting into the markets. And one of the interesting ones, I think, is especially because ESG type ETFs are growing in popularity. So Rask Australia has a course on ethical investing. It's called Ethical Investing 101. And they help you find a better understanding of ethical investing and knowing all the differences between things like ethical investing versus socially responsible investing and impact investing. What is all of that? So if you're interested, definitely take a look. We've got a screen grab of the image here below. We took a look at the different topics that they've got in the various courses there. And there's about 19. So there's a lot of good quality content. This is free to enroll. So definitely make sure that you check that out, whether you're interested in ETFs or in this case, ethical investing. And then we take a look at the ETFtracker app. So if you're interested in that, that's at the bottom of the page. Check out the forum. We're getting more questions on, what types of ETFs, how should I look at that? What kind of data is there on ETFs? Which ETFs have different holdings? All of those questions and more are in the ETFtracker forum. So check that one out. And then obviously we are on the different socials. We are on quite a few. So you're probably listening to this on Spotify or watching on YouTube, but we're also on Instagram. So we've got a growing following there. We are on Twitter, and we're also on TikTok. So we're trying to do some videos there, not quite just all dancing. There is a lot of markets focus on that. And there's also LinkedIn. So whatever you're on, ETFtracker is there. So make sure that you take a look. So yeah, that's pretty much it for the ETFtracker show. So last week we had a little bit of a delay in getting the newsletter out. The video was able to come out because I'd scheduled that, but I was doing the newsletter a little bit manually and I fractured my hand on Thursday. So I missed out on getting the ETF newsletters out in a timely manner. But from tomorrow, it's going to be scheduled. So you'll see that at 7:30. But I'm Mark. This is the ETFtracker show. This is the Exchange Traded Fridays episode, number 5 for the week ending the 20th of August. Thanks very much for your time and happy investing. See you later.